Good morning, viewers. Welcome to Top of the Morning by Mint, your weekday newscast that brings you 5 major stories from the world of business. It's Friday, September 13th, 2024. My name is Nelson John. Let's get started. The Indian stock market set new record highs yesterday. Nifty was up by 1.9%, while Sensex rose by 1.8%. But this time, it wasn't just benchmark indices that were setting records. Even midcaps joined the party. Deepti Sharma explains that Thursday's rally involved a lot of hopes of rate cuts in China, Europe, and the US. Deepti also answers a crucial question for investors. Will the uptrend continue, or will investors look to book profits? Imagine buying a cake but not being allowed to eat it. Confused? Me too. But that is exactly what the Reserve Bank of India wants from a Japanese bank. The Sumitomo Mitsui Bank wants to buy 51% of Yes Bank. Fair enough. RBI has been looking for a majority buyer since it intervened to prevent a collapse. But the banking authorities want to cap Sumitomo's voting rights at just 26%. The RBI doesn't want the Japanese bank to have the power to veto any big policy decisions, yet is fine with it bankrolling the entire operation. Anirudh Lashkar and Gopika Gopakumar bring to you the inside details of this rather confusing development. Lately, several venture capital insiders have been leaving their jobs at big firms to start their own funds. However, they're hitting a wall when it comes to drumming up investor interest. It turns out investors are currently more captivated by the juicier returns of the public markets. For example, while some public stocks are offering returns of around 25%, private ventures are lagging behind at about 15%, making them a harder sell as they are also riskier and less liquid. Mansi Verma and Priyambada report on these new VC firms that are finding it hard to raise funds, especially as limited partners prefer to stick with established managers they trust. Sachin Ningto-Kongjam's sister has been pestering him with questions about the best mutual funds to invest in. To help her and you, Sachin took a deep dive into thematic and sectorial funds, which have been growing by leaps and bounds of late, owing to stellar returns. But here's a catch. Every year, a different new sector does well. By the time most investors catch on to the trend, the returns start petering out and a new sector takes the top spot. This can lead to excessive churn and more tax. If you've been thinking about investing in thematic or sector funds, you can't afford to miss this story. The Central Consumer Protection Authority is finalizing new guidelines to prevent misleading practices by IAS coaching institutes. Under these guidelines, coaching centers will no longer be able to require UPSC aspirants to sign agreements upon enrollment, allowing the use of their personal details for advertising. Soon, those who pass the exam will be able to choose whether or not to sign such agreements. The new rules clarify that any promotional content featuring former students must be based on explicit consent, helping potential candidates better assess the advertised claims. This policy change is a big win for transparency and protects young aspirants who may not grasp the full implications of signing such agreements when they join an institute, writes Tirendra Kumar. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with fresh business news. Until then, have a great day.